Hello and welcome to the Weekly Outlook at XM.com. Several central banks will deliver crucial decisions next week. We'll be discussing the upcoming meetings and the potential reaction in the markets. I'm Maria Pachordes, and joining me is Senior Investment Analyst Marios Hadjikyriacos. So Marios, let's begin with the Bank of Canada, which will conclude its meeting on Wednesday. A rate increase is expected, but the question is, will it be a half point or 3/4 point move? And what will the decision mean for the loonie?
Hello, Maria. Well, the markets are really split on that. The market pricing is 50-50, so the markets see it as a coin toss. We'll definitely get the rate increase, but how large is it going to be? There's solid arguments on both sides. So inflation is still hot, the labor market is still in good shape, so that gives the Bank of Canada some leeway to keep pushing. However, house prices have started to decline. That's big for Canada because they probably had a housing bubble, or at least housing prices rose very steeply. So now there's a risk they come down too aggressively. That's not what you want if you're a central bank. And the latest business survey from the Bank of Canada itself showed that most Canadian companies already expect a recession over the next year. So considering also that we saw oil prices come down quite significantly lately and that Canada is a major exporter of oil, I think the more prudent option is for the Bank of Canada to go for the smaller choice. A half point rate increase would make more sense here, and if that's the case, we might see a negative reaction in the loonie on the news.
Moving over to Europe now, markets have priced in a 3/4 point rate increase from the ECB. So all eyes will be on President Lagarde's press conference. What do you think we'll hear from Lagarde, and what reaction might we see in the euro?
Yeah, so Lagarde and her lieutenants really have an incentive to talk up the euro. So the Eurozone's main, the source, the root of all of the Eurozone's problems is the energy crisis, of course. And when your currency depreciates, when you have a very weak euro, well, and you import most of your energy, well, that makes it even more expensive to import energy. That's not what you want. You don't want your currency to depreciate very, very dramatically. So the ECB ideally wants to put a floor under the euro. They want to defend the euro at this point. Now, how might they do that? There's a couple of ways. I think the easiest way, though, would be for them to open the door for a higher terminal rate. Right now, the markets are saying the ECB is going to raise interest rates to around 30%, and that's going to be the peak. Well, if Lagarde sort of opens the door a little bit for, the peak might be a little higher than 3%, then suddenly that might be a hawkish surprise for the markets. Obviously, they don't want to overdo it. If you overdo it, you might cause panic in the bond markets like we saw in the UK, and that's something you want to avoid. But they also want to prevent any further depreciation in the euro. Now, here's the bigger picture about the euro. Recently, we saw European gas prices decline very substantially. Now, that means that the energy crisis is calming down and the winter might not be Armageddon after all. We'll probably still see a recession, but perhaps the recession won't be as deep as investors feared initially, right? So considering that the ECB is trying to, or rather wants to defend the currency at this point, and that energy prices are finally moving in the right direction, I think there's some scope for a relief rally in the euro from depressed levels, right? Not a trend reversal. For a trend reversal, we would also need to see a pivot from the Fed that weakens the dollar. We are not there yet, but a relief rally that is quite plausible.
And finally, in Japan, we'll get the Bank of Japan's decision on Friday. Direct intervention in the FX market by the government hasn't done much for the yen. Do you think the Bank of Japan will consider a policy shift at this point?
I doubt it, at least not yet. So the yen has lost 30% of its value against the US dollar this year, which is huge for a major currency. And yes, the government intervened in the currency market and it threatened to do it again, but that didn't accomplish a lot. It slowed down the bleeding, but that's it. So the question heading into this decision is, has anything changed to elicit a shift at the Bank of Japan? And the answer is Probably not. So inflation is running at around 3%, which is relatively high for Japanese standards, but the Bank of Japan sees that as transitory. They are looking at wage growth and inflation expectations. And because those remain muted, the Bank of Japan is arguing this inflationary wave is being driven by supply factors. Those will fade before long, and we are not seeing any organic, any domestic inflationary pressures in Japan. So why would I adjust my policy? That has been their line of thinking. So I don't think we're going to get a policy change this time. That implies that the outlook for the yen remains negative. As long as every other major central bank in the world is raising interest rates and the Bank of Japan is not, that means interest rates are working against the yen. And yes, the government might intervene in the FX market again, but that probably won't accomplish much. It might simply delay the inevitable. For a trend reversal, we would need to see either a change of heart, a pivot from the Bank of Japan, or from the Fed, or both. And we are not there yet.
Marios, thanks so much. And thanks for joining us at XM.com for this weekly outlook.